Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB on this Thursday afternoon. You've got Ebony and Ivory with you today, Juliet, Sally, Nadine Blaney, and a pleasure. It's an interesting session out there, isn't it?
It absolutely is. We were just talking before we came on air that, we were quite a fair bit down earlier in the session, but we are going to possibly get just into positive territory. Let's have a look at where the local market is finishing up the day's trade. You can see a 1/10% their gain on the CBO 200, but the ASX 200, I think, just up 1 point or so. It certainly has been, as you alluded to as well, a session or a week or a few weeks of very low volumes as well.
Yeah, so when you've got low volumes, you often get these exaggerated moves. Week to date, down by 1.3%. Month to date, off by 0.35%, and in the quarter, down by 3%. So, Juliet, one could potentially be asking themselves,
where's Santa? So certainly that is our main themes of the day, because, everybody keeps asking, when is this Santa rally going to come? Chris Weston from Pepperstone telling me, look, maybe it's not going to come at all this year, but Martin Crabb was among those that thinks we're still going to see a bit of upside before we head into Christmas.
Yeah, and it's interesting because we talk about the seasonality, we talk about the Santa rally, but a lot of people point out that the Santa rally often happens after Christmas itself. So for those of you still hoping that you've been nice instead of naughty this year, we will see.
Splitting Woodside as well. This was major news this morning before the market opened. Meg O'Neill, good friend of AusBiz, she comes to us every reporting season.
Yeah.
Such a lovely lady. She is leaving Woodside as the CEO after just around 2 years, heading to global oil giant BP, making her the first female leader of a global oil giant, which is pretty impressive.
Very impressive, very big job. They've appointed an interim CEO from internal ranks. Her name has just slipped my mind right now, but they say that I think so. Yeah. They've got a number of internal candidates, but they will be looking globally. We'll watch this story with much interest. And guess what? Won't tell you who, but Woodside was one of our 12 stocks of Christmas picks, which we're still releasing.
I think I know who. Does it start with M and rhyme with Eichel Gable?
Maybe.
Silver landings as well, because silver actually hit a record $66 an ounce. I was speaking to Jonathan Barrett from ETO Markets earlier. He's got a very bullish forecast of more than $70. He's saying, look, why can't silver even get to $100 an ounce?
Yeah, well,
incredible.
I mean, most people agree that gold will continue on its trajectory. That was covered on the call today, including a pick or two from my expert guests. Why don't we check in on some of these sectors, though, and we'll begin with energy. Just looking at the price of crude, making some small gains today, up by, about 0.8%. So we're keeping our eye on that commodities complex. Woodside Energy down by 2.7% on Meg O'Neill leaving. Just instability. Nobody likes a surprise like that either.
Indeed. All right, let's have a look at the banks. We saw mostly weakness apart from CBA coming through, and quite a lot of news, which we'll get to in a moment, in the overall banking space that did weigh negatively on sentiment too.
So taking a look at normal defensive part of the market, consumer staples, and of course lots of people are going to the big grocery stores and buying their hams, and I've seen a few turkeys on the shelf this year, lots of pies. Woolworths is up by about 1%. In fact, if we take a look at the sectors overall, we have 6 out of the 11 sectors lower today. A-REITs are actually the best performers.
All right, well, we touched on Meg O'Neill resigning there, shares down by almost 3%. Netwealth was another interesting story, agreeing to pay more than $100 million in compensation to clients who invested their superannuation in the First Guardian Master Fund.
Even though some in the market have questioned whether this really changes the investment equation for Netwealth, if they can be seen as more than a platform and actually partly responsible for what they have on the platform, the share price did rise by 2.25% by the end of the session. So ANZ held its AGM today, and really interestingly, it's received a second strike against its remuneration report. Some shareholders not happy.
Indeed. Bendigo and Adelaide Bank also slumping, I think about an 8-month low. It's being investigated by AUSTRAC, the financial crimes watchdog, for potential breaches of money laundering laws.
In the uranium space, Boss Energy, this has just been a basket case this year, confirming that its South Australian Honeymoon mine contained much less saleable product than originally forecast. Not good.
APA Group, though, going up, selling 20% of its stake in the all gas distribution network, the aim to fully sell the asset in a couple of years.
Austal, so defence has been one of the key thematics through 2025, and Austal has won a $680 million defence contract for government shipbuilding.
And Bapcor, look at that when you look about CEO succession plans. This is on a switch. Chris Wilesmith to become CEO after Angus McKay left the company after 16 months in the job, particularly after Bapcor had said they had a very disappointing October and November.
Yeah, that is another company that has really disappointed investors so far this year. So let's get some perspective on all of that and what's to come. And for that, Nathan Somasundaram from Deep Data Analytics joins us now. Nathan, welcome. I hope you were listening in. Looks like you're in some sort of a snowy locale right now. But what do you think about the whole prospect of a Santa Claus rally? Do you even care?
No, not really. I mean, if you're investing for a couple of weeks, you got issues. This market is hard enough for the, thinking medium to long term. I cannot work out how you can trying to pick something for a couple of weeks or even a day traders. Each to their own, but it's just that's just too hard.
I think it's just giving journalists like us something to talk about, to be honest, Nathan. But let's talk about some of the.
I mean, I can see their concept, right? Because US fund managers finish in December, so they generally tend to hold that up pretty well. Because if you're reporting in the US, you want to be doing well into the close. So usually you will get a bit of a run, even if the markets are weak for the first 2 to 3 weeks of December. You probably will get a run at the last week of December. It's just like what we see in our market around June 30. There's a certain level of financial accounting that plays out at the end of financial year ends.
Nathan, let's go into stock specifics though. I mean, we mentioned Meg O'Neill. I was talking to John Abernathy from Climb Investment Management after the news broke, and he said, look, just so well respected in the industry. We've spoken so many times to so many guests about you invest in companies based on who's leading you. What does the departure of somebody like Meg O'Neill from not only Woodside but from the ASX complex mean more broadly?
Look, I think it depends on the sector because I think it's a bigger issue when you're a growth stock because you've got a lot of growth plans and there's a lot of obviously structural risk to the growth plan, and you want management to be stable through the growth play. So that's a bigger risk. For me, Woodside is a bit more defensive play. I don't think it's a huge risk. Management, I think the plans are set. It's almost like trying to turn a semi-trailer. You're not going to do a 3-point turn. So changes in this kind of sector tends to happen over the years, and it's a slow process. I think the strategy is pretty much set. And the other thing is obviously the commodity price, right? Everyone looks good when the commodity price is rising, and LNG prices are doing quite well. So I think it's relatively well placed. We kind of got in at the bottom, and it's had a bit of a bounce, and I suspect it'll continue to do well. Even in any kind of transition side, gas is playing a part in that. So, in medium to short, I guess long term, it still plays a decent part in it. So, I'm not too fussed, but it is. I think in Australia we don't appreciate good management in tough sectors till they're gone, and the bigger sectors. If you look at where weakness comes into the cycle, and I hate to point out the data, but when you got bank CEOs leaving the banks, usually that's bad for the bank sector, and that's generally the trend in most sectors. So if you got senior CEOs leaving after they've been there for a while, I tend to worry about that sector. But I think energy, in a way, for me, it's quite undervalued. I think it's probably one of the cheaper sectors in the overall market. So I'm not overly fussed, and Woodside is a pretty dependable business model. Commodity price doing well, so I think it's okay, but it's not a good sign when senior managers, senior CEOs leave our market. I think that the really high quality management is relatively thin, so I'm not a fan of them leaving either.
So, Nathan, just talking about themes for 2026, I know you've been positive on energy through 2025. You just said that you think LNG will continue to do well. What other forms of energy are you interested in? Do you look to uranium still? Do you look to oil, for example?
Yep, I like all of them. I like uranium, I like oil, I like thermal coal. Um, it's not a question of climate change or not. It's a matter of where we are on supply and demand cycle. And if you think about everyone's paying up for AI data centers, they need a lot of energy. I think inevitably you're going to go down the nuclear pathway, so uranium plays a part in it. It is volatile. If you want to invest in that sector, it's not for the faint-hearted, but that's going to take time for you to build all that infrastructure. During that time, I can't see much else other than coal. So I suspect thermal coal in the short term will do relatively well. So we have pretty good exposures in both of them. And then on the other side, then you look at someone like, I guess, oil. And yes, oil is down. Interestingly, the US is dumping oil on the market to keep the prices down, despite all the geopolitics around the world, and most of them are, let's not be subtle about it. They all are linked with energy, right? So the fact that oil price is where it is, despite all that, there is a certain level of manipulation. But I don't see that lasting. Eventually, in every inflation cycle, energy and food join the cycle. So I'm more than happy to wait for that.
What do you think is going to be some of the key movers in 2026 when you get out your crystal ball? Because it looks like you've got one in space there. Lithium is talked about a lot, silver as well. What do you like?
Look, it is going to be one of the most exciting years. And I don't mean that on a negative way or positive way. I think there's going to be a lot of volatility. I think 2026 is setting up to be pretty hard for fund managers. I mean, it's been hard for them the last couple of years. It's not going to get any easier. So we haven't changed our strategy. We still think there's a inflation cycle plays. Sectors linked to that do well. So you guys were talking about gold and silver. I suspect both of them will do well. I'm not picking targets. I just know it's going to go higher. So we're long that sector. And then we think the food thematic, we're seeing the supply side disruptions. If you think about what the wars add to the transport logistics, that makes it even worse. So I think the food thematic still plays quite well. And then energy, as we discussed before, I think the energy plays well. But I think the trick is going to be trying to pick the timing of things. I think it's going to be really tricky. I think the moves in the market could be quite different for each quarter of next year. I think there's going to be quite a bit of risk management that you have to play through. So the market's going to be quite volatile next year, and I think you have to ride it through. I think you have to be quite flexible, and that will favor large caps over small caps. And I think the defensive sectors like healthcare, utilities, I guess infrastructure, REITs, those kind of sectors who tend to be less volatile will play a decent part of people's portfolios. So it's all those things. How do you ride the volatility is going to be important. I think you can't just buy and hold. It's easy to say, but when you go into next year where there's going to be so many things that can move around, and you're sitting at 25-year high multiple, yeah, it's going to get entertaining.
Wow. All right, we may as well leave it on that note. Nathan, lovely to see you today. Hope you have a great holiday with your family. Stay well, and we'll see you in the new year.
Same to you guys.
Take care. So on the call today, we did a little bit of a twist on an international special. So it was all companies that have international exposure, ASX listed, or perhaps even dual listed. So the stock of the day was IDP Education because, of course, it was in the news today and it's very exposed in the UK, Australia, and other countries as well. So Henry Jennings from Marcus Today, Mark Gardner from MPC.
I think at some stage in the future they will be in the box seat once the cyclical turns around and we start to see that nationalism calm down a little bit globally, and then it'll be a great time to buy it then. But at this point, I'd probably say it's a hold for me. I mean, erring on the side of a buy, but because I think that they will tick along and survive. They do look quite cheap, and it has stabilised for the first time in quite some time.
It's hard to see the light at the end of the tunnel. The good thing is these guys have done well with what they've got, so it's about controlling what you can control, and that is a positive. I think at these sorts of levels, what is it, 560 odd, it's probably a hold. I'd say there's an upside probably to 6.
All right, let's have a look at some of the leaders in today's session. Kicking it off with, what did we see? I know Bapcor, I think, was up there.
Bapcor was one of the best.
There we go. Bapcor definitely up there by more than 15% on that leadership change. Austral, we mentioned there, that $680 million contract. DigiCo, Premier and SiteMind are also looking good.
Yeah, Premier was noted as a bonus buy on today's episode of The Call, if you'd like to have a little listen. On the other side of the ledger, though, we had Boss Energy. While it's talking up its FY26 production and cost guidance, really got beaten up, down by 26% pretty much, on the news that the deposit at its Honeymoon project is less than expected. But look, we didn't have much love for some of the other uranium plays, including Deep Yellow, Paladin and Liontown. Liontown in the lithium space, of course, but it's actually one of the best performers this year, so maybe a bit of profit-taking creeping in there.
Yeah, and those stocks have done well over the last couple of sessions, haven't they? Credit Clear, that was an interesting, I think, move there that we had with DTS, is that right? Yeah, their acquisition here of Credit Clear entering into a binding agreement to acquire DTS, a SaaS early-stage collections business. Shares up by more than 12%.
Okay, so there you go, a bit of M&A in the small to mid-cap space. Paragon Care down by 14%, and Saturn Metals shedding 8.8% to 52 cents per share.
All right, the Bank of England tonight, 25 basis point cut expected. The ECB also meets, but no change expected there.
We also get inflation in the US for the month of November. So yeah, it'll be interesting to see. 2.9% rate is expected, but of course we're very sensitive to any hint of sticky and rising inflation. I would note on that BOE piece, we have a good note by Kyle Rudda from Capital.com in today's newsletter edition of the COB. He spent a lot of time in the UK and is calling it a bit of a cautionary tale for Australia.
Indeed. All right, tomorrow, still sticking with that theme of all these central banks, quarter point hike expected from the BOJ, the Bank of Japan, and private sector credit for November also due.
All right, so we have really brought the curtain down on this market. That's the CBO Australia Index closing mildly positive. The S&P ASX 200 also very, very mildly positive. 8,588. So that's oh gosh, we're gonna have to call it flat, I think, Jules, to be fair to our viewers. US E-minis are higher, so NASDAQ and S&P 500 E-minis are looking not too bad at the cusp of what could be a big night for data.
Indeed. All right, tomorrow, the final day of the trading week and the last full trading week of 2025. We are going to be back from 9:45 a.m. Eastern to do it all again. We'll see you then.
See you then.